Hi everyone, good to have you in class today. All right, quickly, today we'll be looking at financial accounting, and under financial accounting today, we'll be looking at number one, the double entry principle, and number two, we're going to be looking at the formats for the 6 subsidiary books, or you can call them prime books. It's 6 subsidiary books. Then lastly, we're going to look at how to know which account to either debit or credit. Okay, quickly we're going to look into that right away. Okay, the first is the double entry principle. The double entry principle. Okay. Every transaction has a dual appearance. Okay, every transaction has a dual appearance. That is to say, for a transaction to take place, that means there must be a receiver and there must be a giver. Understand, every debit entry must have a corresponding. That's another way of analyzing the principle, that every debit entry must have a corresponding credit entry. Now, the first thing to do is you first of all, number one, identify the accounts involved, the two accounts, or the accounts, multiple accounts involved first. That is the first thing to do. And in our previous class, I said in our previous class where I analyzed the various classifications of accounts. If you haven't seen that video, I'll drop the link on the description section now. You go there so that you know the various classification of accounts that we have. That will help you understand this principle very well. Now, number one, I said you identify the two accounts or multiple accounts involved. Then number two, you identify which of the account is giving out and which of the account is receiving. For the transaction now that is happening, which of the account is receiving the transaction and which of the account is giving out the transaction. Now, when you identify that, then the third thing is to know which one to debit and which one to credit. So usually you debit the receiver, the account that is receiving, you debit that account, then credit the account that is giving out the transaction. I don't know if you understand it. For instance, if I pay rent to my landlord, using the check, now that's the accounts there involved are the rent accounts. Now I paid with check, not cash. So we have bank account. Okay, bank account. These are the two accounts involved. Do you understand? Now, having identified this, you now ask yourself which account is giving out and which one is receiving. Rent, you debit the receiver, and credit the giver. Okay, you credit the giver. So bank rent is receiving, and bank is the bank account is giving. So this is how you draft it out. Now, this is your rent account. Then this is your bank account. Okay, this is your bank account. So we are debiting the rent account. So you come here, bank. Okay, the particulars will be bank, then the amount. Okay, then you come to bank account. This is the debit and the credit. This is the debit side and the credit side. Okay, let's say it happens, let's put our date here. Let's assume 1st of January 2023. Okay, so you come to bank accounts. The particulars here will now be rent. 1st of January 2023, rents. Okay, this is the amount, because this is a typical example of what I'm talking about. So you identify the two accounts involved, rent account and bank account. You debit receiver because rent is giving out, then debit credit giver, bank is giving out. Okay, the rent is receiving, bank is giving. Okay, this is how you draft it out. your debit rent account, just like we indicated here, using bank as the particulars, as the details, okay? Then you credit the bank account using rent as the particulars, okay? All right, there is that. Secondly, I said we're going to look at the format for the 6 subsidiary books in our previous class. Let me just refresh our memory. We have the sales day book, the purchase day book, the return inwards book, the return outward book, the cash book, and the general journal. So we are going to look at each of them, their formats, quickly, okay? So we are starting with the sales day book. We have the date, the sales invoice number, the particulars, or you call it customer details, then the amount. This is a typical format for the sales day book. We have the sales day book. Then for the purchase day book, it's the same format. The only difference here is we have the purchase invoice number. Purchase invoice number for the purchase day book. For the purchase day book, we have the purchase invoice number, we have the particulars or customer details, we have the amount. It's the same thing. Then for the return inwards book, for the return inwards, return inwards book is the same format, but here we have the credit notes number. Okay, we have the credit notes number, date, credit note number, the particulars, and the amount. The same format. Then for the return outward, book, we have the same format, okay, but the difference here, we have the debit notes number, okay? We have the debit notes number, we have the particulars and the amount, the same format. Then for the cash book, it's quite different. For the cash book, okay? For the cash book, it's quite different. So for the cash book, we have the single column cash book. We have the double column cash book. Then we have the 3-column cash book. The 3-column cash book. Okay? For the cash book, we have the single column cash book, the double, and the 3-column cash book. And let's see how the format looks like. So for the single column cash book, we have something like this into 2. Then we have the dates, we have the particulars, we have the folio, we have the amounts. This is the debit side, and this is the credit side. So differentiate this by a thick line, differentiating the debit and the credit side, okay? So the same thing here, the dates, the particulars, folio is spelled F-O-L-I-O, and amounts. Folio is simply a reference page of a ledger. Cash book is a ledger, so it's just a reference page where you make references for some transactions that are unique, okay? All right, so this is the single column cash book. Single column. This is a format for the single column cash book. Now let's look at the double column cash book. The difference here is this. This is the difference. Let me reduce this. The difference is this. Sorry, the board is small, so I'm going to abbreviate some of these items. Okay. The double column cash book. So we have the dates, we have the particulars, we have the folio, we have the cash, and we have the bank. Dates, particulars, folio, cash, and bank. Cash and bank. Okay? Date, particulars, folio, cash, and bank. This cash and bank differentiates the double column cash book from the single column cash book. Okay? Cash and bank. In our subsequent class, we're going to explain what we actually mean by this cash and bank and all the rest of it. Then lastly, we have the three column cash book. Three column cash book. Now the difference here is this. There's a difference for the three column cash book. There's the difference. We have sorry, I have to minimize this so that the board will be enough. This is the particulars. This is the particulars. Then we have folio. Put your folio. Then we have discounts allowed. Then here we have discounts received. Okay, these are the difference. Discounts allowed. What makes it three column cash book is because we have discounts allowed, cash, and bank. Okay, here we have on the credits I have discount received, cash, and bank. So we have dates, particulars, folio, discount allowed, cash, bank. All right, this is the three column cash book. Then lastly, we want to know how to know which account to either credit or debit. So when we started, I said the first thing you do is to identify the two accounts involved. Okay, when you identify the two accounts involved, then you identify which of these accounts is receiving and which of them is giving out. Okay, these are the two basic things you have to note. Then when you do that, then it will now help you to know which account is going to be debited and which account is going to be credited. That's why I said initially from the beginning, you debit what? This is a simple rule to follow. You debit the account that is receiving. Okay? Debit the account receiving and credit the account giving out. Okay? Yes. So we're going to stop here for today. Yeah, don't worry. By the time we move further, you understand as we progress. Okay? So we're going to stop here. Please, if you have not subscribed to our channel, please do that. Invite people to this channel. Let them know. Share it so that people will know what we are doing. Okay? All right. See you next time. Bye-bye for now.